Yeah, welcome back to class. Now, in this class, we shall be looking at the imposition of value-added tax, under which we will be discussing the threshold for VAT compliance in line with Section 15 of the Value-Added Tax Act. We shall be discussing VAT compliance threshold. Okay, in line with Section 15 of the Value-Added Tax Act as amended. Are we together? Okay, so also we'll be looking at when goods and services shall be deemed to be supplied in Nigeria in accordance with Section 33 subsection 2 of the Finance Act of 2019. Also, in brief, we'll be discussing the basic points of tax, basic tax points. That is, at what point should tax be collected, or actual tax points. Okay. Remember, we've under the legal basis and nature of indirect tax, we said the Value-Added Tax Act impose the payment of VAT, or impose VAT on consumption of goods and services. Okay, impose value-added tax on consumption of goods and services consumed by both individual and corporate person. Are we together? Okay, so imposing the Value-Added Tax Act, then we may need to be looking at the nature, objectives and administration of the value-added tax. Okay, so the advent of the value-added tax concept in the very early part of the 21st century brought about a global acceptance by many countries. This was due largely to the ease of administration and high collection heat, and the objectives of value-added tax include to make the tax system more transparent, to increase government revenue, to reduce tax evasion practices, to simplify tax collection procedure, among others. Okay, so okay, so now let's look at the VAT compliance threshold. VAT compliance threshold. Based on the provisions of the Finance Act of 2019, the Section 15 of the Value-Added Tax Act as amended, okay, through the Finance Act of 2019 states that only taxable persons with taxable supplies of 25 million naira, only taxable persons with taxable supplies of 25 million naira and above are required to charge collect, remit the tax, and then file monthly returns to the Federal Inland Revenue Service. Okay, so again, the Finance Act of 2019 amends section 15 of the Value Added Tax Act, and that states that only taxable persons with taxable supplies of 25 million naira and above are required to charge, collect, remit the tax and file monthly returns to the Federal Inland Revenue Service. Okay, so the implication of this is that any taxpayer who made below 25 million naira are exempted, are not mandatory to collect, charge, collect, and remit tax. Okay, so if you cannot charge, you cannot collect. So if you are not collecting, so what are you remitting? Okay, but that doesn't stop them from complying with the statutory requirements, okay, such as filing of returns. Okay, so any taxpayer who made 25 million naira and above in respect of taxable supplies before the introduction of the Act shall continue to charge, collect, and remit the tax even though it has not achieved the 25 million threshold in the current year. Even if it has not achieved the 25 million threshold in the current year. So any taxable person who did not achieve the 25 million naira threshold for taxable supplies before the introduction of the Act, that is before, remember the Finance Act of 2019, which is the first of it, was signed sometimes in January 13th, 2019, okay, but was not effective, or let me put it this way, some part of it was not effective not until February 1st, not until, so the Act became effective 1st February 2019, 1st of February 2019. Okay, so now for taxpayer who did not achieve the 25 million naira threshold for taxable supplies before the introduction of the Act, shall commence to charge, collect, remit, and file returns immediately it achieves the 25 million threshold in respect of taxable supplies anytime within the year. So it should be noted that any taxable person can voluntarily register, charge, collect, remit the tax and file monthly VAT returns if it has not achieved the 25 million threshold in respect of taxable supplies, but such a person needs to notify the FIRS. Okay, I repeat, any taxable person can voluntarily register, charge, collect, remit the tax and file monthly VAT returns if it has not achieved the 25 million threshold in respect of taxable supplies, but such a person needs to notify the FIRS. Such a person needs to notify the FIRS. Okay, so any taxable person who expects to achieve the 25 million naira threshold will expect to achieve the 25 million naira threshold at a future date within the calendar year is at liberty to immediately commence to charge, collect, remit the tax and file monthly VAT returns. So where a taxable person achieves taxable supplies of 25 million naira and above in a year, he is expected to file monthly VAT returns even though part or whole of same is exempt from VAT. Again, where a taxable person achieves taxable supplies of 25 million naira and above in a year, he is expected to file monthly VAT returns even though part of whole of same is exempt from VAT. So it should be noted that taxable supplies exclude capital assets, which is taken care of under the Capital Gains Tax Act, and also it excludes capital asset that qualifies for capitalization, such as qualifying capital expenditure for the purpose of capital allowances. Okay, so which are capitalized in the books of the taxable person and the sale of the whole or part of the business altogether. So for instance, now if a taxable person achieved taxable supplies of 48 million naira in 2019. Okay, 48 million naira in 2019. So when should this start the collection and filing of monthly VAT returns? Okay, so this kind of taxpayer having achieved taxable supplies of 48 million naira in 2019 should charge, collect tax and file monthly VAT returns in January 2020. In January 2020. Another illustration is a taxable person commenced business in February 2020 and made taxable supplies of 10 million naira in the month. In March 2020, he did not make any taxable supply. In April 2020, he was awarded a contract for taxable supplies worth 40 million naira. So if you had 10 million plus 40, so you have 50 million in total. Okay, so when should the taxable person approach the FIRS and to start collection and filing of monthly returns? So the taxable person should approach the FIRS immediately the contract is awarded. He is expected to issue a tax invoice on 40 million naira, collect VAT, remit, and file returns with effect from from the following months, which in this case probably will be May 2020. Are we together? Okay, so that's that. Let's move to the next subtopic. When goods and services when should goods and services be deemed to be supplied in Nigeria in accordance with section 2 of the Value Added Tax Act as amended by Finance Act 2020. Okay, so taxable supplies of goods and services are goods and services other than those goods and services listed under the first schedule of the Value Added Tax Act 2004 as amended. So essentially, these are goods and services liable to value added tax at the prescribed rate, which currently is at 7.5%. Okay, so goods and services shall be deemed to be supplied in Nigeria. In respect of goods, remember figure 1, writing, these goods shall be physically present. These goods shall be physically present in Nigeria at time of supply, imported into Nigeria, at time of supply or imported into Nigeria, or assembled in Nigeria, or installed in Nigeria, Are we together? Or installed in Nigeria? And then 2, the beneficial owner of the rights in or over the goods. The beneficial owner of the rights in or over the goods is a taxable person in Nigeria. And the goods or rights is situated. The goods or rights is situated, registered registered or exercisable in Nigeria or exercisable in Nigeria. So that is in respect of goods. And in respect of services, okay, so the service is rendered in Nigeria. Where a service is rendered in Nigeria by a person physically present in Nigeria at the time of providing the service is provided to and consumed by a person in Nigeria, regardless of whether the service is rendered within or outside Nigeria, or whether or not the legal or contractual obligation to render such service rests on person within or outside Nigeria. Okay, so that's in respect of services. Okay, so also in respect of incorporeal property, in respect of incorporeal, okay, so when the exploitation of the rights is made by a person in Nigeria, to the rights is registered in Nigeria, assigned to or acquired okay, so the rights is registered in Nigeria, assigned to or acquired by a person in Nigeria, regardless of whether the payments for its exploitation is made within or outside Nigeria. Then the third one, an incorporeal will be considered goods deemed to be supplied in Nigeria, where the exploitation of the rights is made by a person in Nigeria. The right is registered in Nigeria, assigned to or acquired by a person in Nigeria, regardless of whether the payment for its exploitation is made within or outside Nigeria, or the incorporeal is connected. The incorporeal is connected with a tangible or immovable assets located in Nigeria. So it is pertinent to state that services rendered to and consumed by Nigerian residents while physically outside Nigeria is not liable to value tax in Nigeria. Okay, so again, services rendered to and consumed by Nigerian residents while physically outside Nigeria is not liable to VAT in Nigeria. Okay, so also services rendered remotely, online, or by other virtual means to Nigerian residents or persons is liable to VAT in Nigeria, regardless of the medium of delivery of the services provided to persons while in Nigeria shall be liable to VAT in Nigeria, or services performed in Nigeria. Okay, so services performed in Nigeria to persons in Nigeria is liable to VAT irrespective of the residence status of the provider, of the service provider. So regardless of the medium of delivery of the services provided to persons while in Nigeria shall be liable to VAT in Nigeria. Okay, shall be liable to VAT in Nigeria. Are we together? Okay, so now let's move to the next items on the list. So the next topic now is the next topic is the definition of basic task points and the actual task points. Definition of basic task points and the actual task points. Are we together? Sorry, the laptop is malfunctioning, so while we wait till it come up, basic task point is a point that usually come early, probably when the money is being received in advance. Okay, so when we have a customer that always pay in advance, okay, so such payments is exempted. Okay, such a payment is exempted. So again, we have basic task points and actual task points. We have the basic task points and actual task points. The basic task point is a point where task becomes payable, payable. So in most cases, okay, so again I repeat, the basic task point is a point where task payer becomes payable. So in most cases, the basic task points for a supply, of goods, occurs on their removal. So these normally means that the supply or collection by the buyer. Okay, so the basic task point for a supply of services is when the services are performed. Again, the basic task point for a supply of services is when the services are performed. So that's for basic task points. And then for actual task points, basic task rates or task point arises when the goods are delivered or services rendered. Okay, when the goods are delivered or services rendered. Okay, so an actual task point can be created. An actual task point can be created either before Okay, so actual task points can be created either before or after the basic task points. Okay, so another task point arises if the supplier issues a VAT invoice. An earlier task point arises if the supplier issues a VAT invoice or receive okay, so again another task point arises if the supplier issues a VAT invoice or receive a payment in advance of the basic task points. So a later task point arises if the supplier issues a VAT invoice or receive payment after the basic task point. Okay, so for now we are stopping here. Okay, so do have a successful diet ahead of you. Goodbye.